Plastics are credit cards, debit cards, ATM cards. So those are the three main components of having instant access to your funds. So to start off, we have to throw the disclaimer that the information that is for informational purposes and it's only intended to provide general guidance and does not constitute legal, tax, or financial advice. Each person's circumstances are different and may not apply to specific information provided. You should always seek the advice of financial professionals, tax consultants, or legal counsel to discuss your specific needs before making any financial or other commitments regarding the matters related to your condition. Okay, so the first one is the ATM cards, aka dinosaur cards. So ATM cards are plastic cards that are issued by any financial institution, such as a credit union, that allows the customer to draw money from their accounts through any ATM and some point of sale options. ATM cards do not have a Visa or MasterCard logo, so they cannot be processed as a credit option when using. They are primarily PIN-based transactions. So ATM card features, they can be used for a variety of things: generate a balance from your accounts, deposit and withdrawals at an ATM. You can transfer funds between accounts. You can pay your loans or credit cards using the ATM, generate account statements, and ATM cards can be used to identify for in-branch transactions, meaning that many branches, through the use of technology, you can just go walk outside your ATM card and do the same thing that you would do when you used to fill out forms. And now we're on to debit cards. Debit card is a plastic card issued to a customer or a member by a financial institution. This card allows instant purchase by charging the correct balance from the user's attached bank account. Debit cards usually have a Visa or MasterCard logo. You can also use debit cards at an ATM the same way you would an ATM card with using your PIN. So it's a much more versatile product. So the advantages of having debit cards. Main advantage is you no longer have to write checks for purchases at stores or restaurants. It's convenient for quick purchases at the mall or convenience stores, allows you to not carry cash, and transactions can clear much faster than checks. There's a lot of security features when you use any type of plastic card. You are covered for fraudulent, you are covered if your card is lost or stolen. You also have consumer rights for different types of transactions. If you order something and don't get it, if it arrives broken or damaged, you have options to protect yourself by using that debit card, which you never had with using cash or checks or cash apps, I'll throw in there. So debit card usage and things to consider when you're using a debit card. So selecting debit and entering your PIN will remove the money from your account immediately. It's instant. Selecting credit will cause a transaction to go through, but it could be taken a couple business days. You do have to sign majority of the time over certain thresholds, and the funds are not immediately removed from your account. You don't pay ATM fees unless you have no alternatives. So you're not going to ATMs where it's going to charge you a fee because you're utilizing the Visa logo. You're not paying a fee for the transactions at like the ShopRite or at the mall. So it's a significant amount of savings. Another big point with a debit card is never provide your debit card to someone else, and never, ever give your PIN out to anyone else. In the case of theft in this scenario, a lot of times legal action is your only recourse. So if you're writing your PIN number on your card or a sticky note on it and sticking it on your card and you lose it, there is a high chance you will be liable for that transaction because you provided the information to someone other than yourself. And that's pretty much it on debit cards. A lot of people do not consider, they think that because it's the credit card and debit card, they'll think that they don't have consumer protection rights with a debit card. A debit card has the same exact protections as credit. You can dispute items for a variety of reasons. So it's a really safer threshold than paying with cash. So on to credit cards. Credit cards. What is a credit card? A credit card is a plastic card issued by a financial institution such as banks, credit unions, or credit card companies. Credit cards are considered a loan. The card is attached to a line of credit of a predetermined amount known as your limit by the financial institution and is based on your credit and criteria of creditworthiness, debt to income ratio, credit scoring, repayment history, and the tricky one, credit card utilization. All those components can affect your credit APR and your creditworthiness and the ability to pay back. So some features of credit cards. Some credit cards provide points or rewards. Credit cards provide extended warranties and greater theft protection than debit cards, particularly related to rental cars, traveling, and significant purchases like cell phones. There are features on some credit cards that have those added protections, but the basic consumer process is the same on both debit and credit. Since a credit card is a loan, there is an annual percentage rate or an interest rate attached to the card that the customer must pay on a monthly basis. Credit card usage generates a credit history. This history is reported on a credit report that may allow you to apply for more credit in the future to allow for bigger purchases such as a vehicle or a house. If you do not have sufficient credit to obtain a traditional card, there's an option of having a secured credit card, which is a fantastic alternative to build your credit. You can control your limit. The funds are secured, so there's peace of mind knowing that you're building credit, but it's like almost like a safety net. And this is a really good feature for someone who's starting out and doesn't have significant history, or someone who maybe, life happened and some things happened and you took a hit and you're trying to get yourself back on good graces. It's a very fantastic alternative, and the recovery time can be very swift by using that. So credit cards work. So step one, the card is used at a store to purchase an item. Through merchant service, those little slide readers, the merchant talks to the credit card company and demands payment. The financial institution pays the merchant for the purchase, making sure that funds are available to the customer. Finally, the financial institution generates a statement for the customer and demands payment. A couple key notes to elaborate on that is when you make a purchase, it is unlawful to stop the payment once it's authorized by a financial institution. We have customers that sometimes will say, I don't want this item anymore, please don't pay this charge. 100% of the time, the charge is already paid. So that's when the dispute process comes into play, if we can meet the chargeback requirements that are set for that. So here's some tips when you're looking for a credit card. If you do not plan on paying off the full balance of the card every month, you want to look for a card with the lowest interest rate. Understand that credit cards are variable, meaning it is prime rate at the current level plus whatever percentage rate you were approved for based on the credit criteria. So when you're doing rewards cards, they can get a little pricey because the interest rate is usually higher. And with prime rate fluctuating, you want to make sure that you're going to pay those balances off every month as a good practice. Again, life happens, things happen, but as a general rule. So when you're looking for a credit card, if you know that you're going to be making smaller monthly payments, you do want to make sure you have the lowest interest rate. If you're planning to pay off the card balance, a card with a rewards program is definitely the way to go. There are some really great lucrative reward programs out there. We have some that give you 5% on every Amazon purchase because everybody uses Amazon. And with the significant gas prices, a lot of companies have come up with incentives for you using your credit card for gasoline because the prices are so high, the rewards are plentiful. If you're paying the card in full, you don't pay any finance charges and you're earning rewards at no cost. So if you put $100 on your card and you pay that $100 by the due date, no later than the due date, I should say, and pay your statement balance in full, you have no interest and you get rewards. So it's a win-win. But be wary of any offers that seem too good to be true, because they usually are. You always want to watch promotional interest rates, because there are some fine print in there that you really want to pay attention to. I'm going to give you no interest for 12 months. The one question that always doesn't come up is what happens after 12 months. A lot of times you'll get all 12 months of interest applied because you didn't pay it in full, which can cause significant havoc on your credit card utilization, your debt to income ratio, and with fluctuations of prime rate can actually do damage, because it can put people over their limit because of that huge inflated interest being applied to the already significant balance. So you really want to read that fine print. You want to make sure you meet the payment schedules for promotional rates, because it can cause an undue hardship if you don't follow that procedure. Look out for mail offers and the fees that credit cards may carry. Make sure you understand what an annual fee is. In this day and age, annual fees, they shouldn't be. So most companies will come up front with their annual fee, and sometimes it's necessary on a credit builder program and things like that. But you always want to make sure you're not getting an annual fee. One of the more significant companies of Amex, they do charge a membership annual fee for many of their cards, but there are a lot of program options they have for being an Amex customer where the annual fee is industry standard, but it's also generated for the extra perks you get with that card. When you're just paying an annual fee to have a card, you really want to understand those terms very clearly. Okay, make sure you read the fine print on credit cards. This is significant because you want to know what your APR is. You want to know what the late fees are, the cash advance APR in terms after promotional periods are over. One significant notation is cash advances. Industry standards cash advances are charged at a higher interest rate. This is pretty much the case for all financial institutions, credit unions, and credit card companies. Even though your purchase rate may be 8%, your cash advance rate can be anywhere from 15 to 29% for that cash advance. The big trick on that is there is no grace period on interest for a cash advance because it is liquid funds. So cash advances start accruing interest from the moment you take them and will not stop until that bucket, as we call them, or that section with cash advances is paid to zero. It will always generate interest and you cannot avoid it. What you want to do if you have to take a cash advance, you want to limit the time to pay that off as quickly and swiftly as possible. That'll lessen the interest hit that you're going to take. And they do hit the card. Even after you paid it to zero, you can have a 5-day and then the interest hits. It is considered legitimate. If that happens to you, if there's some questions about it, speak to your financial institution. For engaged and great customers, a lot of financial institutions will work with some of those fees, especially when there's an urgent matter that caused you to take a cash advance. My opinion on cash advances is to avoid them as much as possible, but sometimes, again, life gets in the way. So, and then when you receive your credit card and you understand its terms, use it responsibly. Make the payments on time. And you're going to enjoy the benefits and the perks of excellent credit. When I talk to people about credit cards, I always tell them, again, this is real life. Things happen, emergencies happen. Make sure that minimum payment is in there every single month on the day it's due. The accumulation of late fees can be significant. The accumulation of interest charges can be significant, and it can really do a lot of damage to your credit history. On-time payments are priority. If you are running low on liquid money and you think you're not going to be able to pay your credit card, do whatever you can to pay the minimum payment on time. The rest, you can make extra payments. Most credit card companies allow you to make significant payments. Key note to that is make sure you're also aware of your cycles. So what cycle we mean by cycle is the statement generation date and the due date. These are significant because when you're making extra payments, or maybe you want to pay it weekly or by the charge, you have to make sure that you are not running into what we call the behind system. So when your statement generates, and from that date until the next one, till the next date, so it's usually on a cycle like a fifth of the month. From the 5th to the 5th, all payments will go into that cycle. People do run into the issue where they're paying on the last cycle and they think they paid the next cycle. So you really want to understand and remember those two dates, which are located right on your statement, so that this way you know that you're paying in the right cycle and will not do any significant harm to your credit to make extra payments. Extra payments are great. I'm a big proponent of them. You can pay anytime you want, but make sure that you're hitting the right cycles, because you might start seeing accumulation of interest. It might be inflated. You might have a late fee and you're going, wait, but I paid it. A lot of times that's because of the date you paid it. You always want to have that statement date run on the 5th, pay it on the 6th if you're going to make an extra payment. So it'll run into the right cycle. So your payment history is always up to date and on time. And that's about all on the plastic cards. So we can visit and see if we have any questions.
Yes, it looks like we got a few here.
I'm still trying to pull them up. Bear with me. Oh, Q&A. Here we go. Okay. I'll start with the first one. We'll go down the line. Is there a way to sign up for multiple credit cards and have less inquiries on the number you sign up for? No. The answer really is no. Each credit card will have its own unique set of preliminaries, its own credit run, its own significant criteria. So you can sign up for multiple credit cards, but you're going to still have the inquiries. But it depends. If you're doing multiple cards with one company, they may be able to use the same type of the same credit reporting and the same inquiry on your credit report on different products in a certain amount of time. Some places are 30 days, some are 60 days. So if you sign up for a Visa premium and then you decide you want to also add in a rewards card, if it's within the 60-day application process, you can use the same inquiry. There are many companies, especially long-term, that will auto upgrade you, that will offer you something. A lot of times that can be negotiated if they're going to pull a hard inquiry or a soft inquiry. Most credit card companies, financial institutions, credit unions are significantly monitoring your credit live in real time nowadays. If we see something that's you're heading in a bad direction or a good direction, usually you'll be well aware and we will have contacted you prior to the big blow up. So yes and no, but as a general financial industry rule, no. Each credit card has to have its own inquiry. I hope that answered that. The next one, if you make payments on the due date and pay it in full, does that still get reported to the credit card companies, affecting your utilization rate? That's a really great question. If you pay your full statement balance on or before the due date, let me back up 1 second. Everything you do on your credit card, payments, purchases, promotional balances, increases, decreases, anything, you are being reported every single month while you have that card, and even sometimes after. Everything you do on a credit card is being reported to credit bureaus, the 3 credit bureaus. There is no time that we do not report for any financial institution, so that you can have your history is live for all lenders, auto loans, that stuff. So always just keep in your head that everything you do involving credit, auto loans, mortgages, anything is being reported. And then, but paying the statement balance, if you're still charged a finance charge after you've paid your statement balance, that's usually because you've had a cash advance, which if you go back, there's no grace period for cash advances. The other thing is that you have to have it before the due date, and it has to be paid in full. I'm not aware if there's a finance charge for the scenario presented here, but if you have one, you can please reach out and we can take a much more specific look at your Visa premium. Because if you pay your statement balance in full by the due date, there is none, as long as there's no cash advances or promotional rates that have not been paid in full by the expiration date. Those are the only 2 scenarios like that. So if you have something, please reach out to Affinity and we will be glad to take a look at that. The next question says, how can you increase your line of credit? Well, simply put, you have to apply for it. You can make an application for an increase. Usually those are soft inquiries, sometimes hard depending on the length and history and your credit worthiness. That's just something you can contact your financial institution or here, wherever you bank, and we will be glad to help you look into that. Okay, so we're going with the next question. Although my credit is currently poor, the FICO score 549, lately I've been receiving pre-offers in the mail from some banks. However, I'm afraid to apply since there's no guarantee I'll get one. I don't wish to have any hard inquiries on my report. I'm close to the 7th year where the dragon might fall off with my credit reports. What is your best suggestion in getting credit builder card, even with Affinity, secured or otherwise, to start building my credit? Okay, so I can answer questions, but I am not a loan officer. So we can get you in touch with the loan department. But so having poor credit is not the whole picture, okay? You've been receiving pre-offers because you probably are in that stage where you're about to fall off, but you're probably getting some pretty high interest rate credit builder cards. I wouldn't apply either if giving you my opinion, because you do not want to have all these inquiries when you're getting to on the other side. I've experienced from the good, the bad, the ugly, from having significant income and credit to being on the worst possible scenario of bankruptcy. So I can tell you that a credit builder card, but with a secured card is your best bet, because your secured card, they're not running hard inquiries. You are securing that money. It allows you to have a line of credit that's secured, that you have that, again, that backup plan, and you can start building credit by making smaller purchases and paying them off directly. When you're rebuilding your credit, you want to keep that credit utilization low, very low. The industry standard is 30%. Go lower. If you want to apply for a $500 card, treat your card like you have a $100 limit. It's a much quicker process to build up credit, and it keeps you in control. And it's a faster way to increase that to increase your credit worthiness again and get right back to where you need to be. It could take 6 months to a year, or it could take 5 years. All depends on how you handle it. But a secured card is always the way to go. A secured card without fees or any extras that you don't really need to, that you really don't need to be having when you're trying to do this process. Answering offers in the mail, it's a catch-22. Sometimes it hits, it works. Monitoring your own credit, you can pull your credit reports from the 3 bureaus once per year. A credit app like Credit Karma or Credit Sesame, all these things are great as long as you're not paying for them. Just to keep an eye, see if anything significant comes up. That is the best suggestions I can make for that. The 7-year derogatory marks, they will start to fall off, but it's not as smooth as they make it sound. A lot of times, if you went into any debt settlements or any kind of payment plans, you really have the power to negotiate a trade. You're paying this amount. They can maybe report you. It takes a lot of energy and legwork, but it can be done. You just have to put the time and effort in. A lot of credit card companies want you back. They don't want you to be stagnant. They don't want you to owe them money on their books. They're willing to help you help yourself. In a lot of those cases, it does take a lot of patience and a lot of a little extra work, but you can do that all without paying fees to these companies that advertise credit boosters and all that stuff. A lot of it can be done. And in the process of doing so, you will be amazed at how much information that you learn about credit and money and interest rates and all the other stuff while you do it. And you'll be able to help the next person, give them the same advice to move on, to get their credit in the right direction. So I hope that answered it. If there's anything else, you can definitely call into Affinity. You can ask for me by name. I'm the only Colleen at the company right now, and I would be happy to discuss it with you. Okay, so the next question, why would I get credit card offers in the first place when your credit is poor? Okay, this is a funny, tricky, not funny, but tricky. You're going to always get pre-screened offers. They're pulling data from various sources. So let's just say you make a purchase on Amazon with your debit card and somebody buys Amazon's third-party listing of customers who bought Nikes. Okay. Credit card companies pay for this data and they'll just pull it and send it to you. Will you get approved? If your credit is poor and you know that you haven't gotten approved for a standard card, the likelihood is you're not going to get approved for these either. These are just promotional items that you're going to have in the back of your head. There is a huge difference between pre-approved, pre-qualified, pre-screened. There's 3 different types. Pre-qualified is you might meet the criteria, but we have to get all your details first. Pre-screened is, well, we took your name and your address and we know you have a job, so we're just going to send you this and see what happens. Pre-qualified is when you had a soft inquiry that you probably are not aware of, just to type your credit worthiness. It does not affect your score, but it's just a way for companies to build their business and get more customers with their card in hand. You always, to me, in a situation where you're working on credit, you always want to stick with your financial institution, a credit union, somewhere where you have a relationship already, where your direct deposit goes. It's just a more streamlined and you have that value and engagement as a customer, so you will have more success by doing this. The pre-screened offers for like Mission Lane, there's a whole slew of companies. Some of them work well for some people. There's nothing bad to be said. They are there for a reason. Just that when they're sending you these offers, they're not guarantees. If you have bankruptcy on your record, if you're not discharged from a bankruptcy, if you've had settlements, you're likely not going to qualify because in the fine print, it will tell you that you cannot have any active settlement or bankruptcies. It's buried like, paragraph 27, line 90, 900. But when you call up and you say, oh, I want to question this offer, they're going to say no because if you have those on your record. So you're always going to get, it's just like no different than getting the ShopRite circular every week, or it's just mass mailings to see what sticks. And that's why people get all these credit card offers. And again, there's a place for those and there is a use for those. It just depends on each person's situation at the time. Okay, the last question I see here is, what's the average turnaround time to fix your credit with a credit card repair company? Well, the average time to fix your credit in its entirety is 7 years with anybody, whether it's you, a credit card company, a credit repair company. Some companies do accelerate the process on paper. And the reality is that it takes time to fix your credit card unless you have significant income increases, circumstantial change, inheritance, trust funds. The basic US consumer is going to take 7 to 10 years to correct what's been done. But there's a lot of steps in the process. So it's not going to say that it's going to be terrible for 7 to 10 years, but there are small steps in the process during that time. If you pay all of your debt off in one lump sum, just whatever you owe, $60,000, you pay it all off, you're going to see a significant increase in your creditworthiness right away because you owe nothing. If you file for bankruptcy, you will see a short-term increase in your creditworthiness once all of those debts get taken off your credit report. But they will come back because they're really still there, depending on what kind of bankruptcy you filed for. So the different chapters, there's a lot involved with that. And that definitely, if anyone's considering such a thing, always speak with an attorney before anyone else. If you're doing it yourself, as I said before, it's a lot of work, but it can be done. You can negotiate settlement on your own. You can use a little bartering chip. I'm going to pay this, and you're going to report me as paid as agreed. There's a lot of room for negotiation there. There's averages are hard, but the significance of it is that I stay on the worst case scenario side at all times because I'm only more pleasantly surprised when it's better than it was. So 7 to 10 years is really the longest turnaround. I've seen the turnaround in 2 to 3 years as well. Some companies will, say to you they're going to do it in 1 year, boost your credit score in 30 days. Keep in mind, yes, it can be done that quickly, but it's not permanent. It's a short-term change. I've never seen it stick for long periods of time. Truth be told, we all have to just be responsible with our credit from the gate, treat it as what it is, a very significant, important thing, as important as health insurance, life insurance, important like your mortgage, your school loans, everything. If you treat it like that from the beginning, you get into, but again, understandably so, life gets in the way, emergencies happen, significant costs for emergencies, all of those things are part of it. So if you have a situation like that, don't get discouraged. This is all fixable. This credit dings, credit hits, credit scores, income, it's all liquid. It's always moving. So you never should be in a desperate situation where there's despair and you think you're ruined for life. Everything can be repaired with your financial institution, with yourself. Just make sure you get there, and there will definitely be a lot to that can be done. So is it important? Yes, but in real life we have a lot going on sometimes. And on to who exactly should I talk to if I was charged a finance charge when a full statement balance paid weeks before the due date? No cash advance involved. If you would like to direct message me on, if you can on this channel, I can look up all that information and give you a call or a email tomorrow. I would be more than happy to do that. If not, I can add in. I think that if you want to get, or you can always call in and again ask for me. But if you want to give me a direct message, are they able to do that on here, Nick?
Yes, they should be able to
Okay.
give us
If you just want to direct message me, all you
chat.
need really is your first name, middle initial, and last name. I'll be glad to look it up to you and contact you tomorrow and let you know what I come up with and explain that for you and take a deeper, more personal look at it. Okay. And another question: how difficult is it to get a paid for delete with a credit card company? It's really not that difficult. It's you just have to you kind of got to be pushy. You kind of got to, do a little research. But example, you have a Capital One card, $200, and you messed up. Okay, so you're going to call them up and you're going to say, listen, I want to pay this off, but I made a one-time mistake, and tell them, I really, really don't want to harm my credit this way. This was, an atrocious mishap. And you can really negotiate it. Sometimes it takes a little bit. Sometimes it could take a few months. Sometimes, if you pay it, and they're going to give you they're never going to delete something, but they will update it to paid as agreed. Customers paying as agreed, something like that. You can't delete what's been done. You can alter it though. And a lot of companies will do that to get paid. They don't want your negative issue on their books. It's, something they really try to avoid. So if you have the time and effort to put into that, it has worked more than not. Sometimes a little bit of time has to go by. They'll negotiate a time frame. But a lot of companies are willing to do that, especially nowadays with inflation and the people running into, the 2008 drop and a couple other significant issues that have come up, COVID job loss, reduction in work hours. There's a lot of reasons why people's credit gets into trouble. And I've seen now more than ever, companies are much more willing and able to work with their clients as opposed to just closing the door. Some still are very difficult to work with. But listen, it doesn't hurt to try and it doesn't hurt to ask, because you're in no different boat than you were when you started asking. So I always say go for it. And I don't see anything else. Oh, wait, here we go. Another one. Will interest rate go higher with the Fed interest rate? Yes, yes, yes. So again, credit cards are variable. So it's the interest rate, the prime rate, plus your credit worthiness. So significant happenings lately with 3 significant rate increases by the Feds in the past 6 months, which is very aggressive, although we were really low down on interest rates for a long period of time. It has been an interesting turn of events in the credit industry. So a lot of people who lost jobs for COVID, reduced income, having your children home for like a year and you had to stay there with them was very difficult on the workforce and people's income. With these rate increases, people were using their credit cards for needs. So now they have these high balances, and these rate increases have really put them over limits and put them in a bad way. That usually levels out eventually with the aggressiveness of the feds. So yeah, every time the prime rate increases, your rate is going to go up. It should not be that significant. This is unprecedented, these 3 increases in a row. Usually it's a much smaller scale, and most people do not feel a real big effect of it. But it's only going to go up by what the prime went up. So the prime was 4, it's 450. So it's only going to go up 0.5. Your rate, your personalized rate will not change. It's the prime rate that changes. And anyone else have anything else? And I did get your direct message, and I will look into your situation, and I will definitely reach out to you. Any other questions about plastic cards, credit cards, debit cards?
It looks like that's all of it. Thank you guys so much for attending our weekly webinar, and have a great Thursday.
Thanks, everyone.
Bye.